Good day, everyone. Mike Stanley, National Director of Senior Lending for Victorian Finance. Basically, a reverse mortgage division, but we like to brand it as our senior lending. I'm on today with Terrence and Terrence Black, our manager, one of our managers here in the division. And we're getting some questions for people on what it takes to qualify for a reverse mortgage. So, Terrence, what's one of the questions we've gotten here lately?
The feedback that we get is obviously the core things to qualify, right? Tell us a little bit about age. When it comes to qualifying, how old do they need to be for the type of products that we have?
That's a good question. Basically, with the home equity conversion mortgage, it's a HECM, home equity conversion mortgage. It's been around since 1988. The reverse mortgage has been around since 1961, but in 1988, Congress passed a law called home equity conversion mortgage. So it's an FHA insured loan. With this particular product, a borrower has to be 62 years of age to qualify for a reverse mortgage. Now, if they happen to be married, at least one of them has to be based on the age 62.
Okay.
Next.
Okay.
What else?
Now, the other one that obviously, if they are old enough, right, when it comes to their property, what kind of LTV do they need to have for that property?
Well, it's kind of a unique situation with a reverse mortgage. We don't basically look at LTVs. We look at available, what we call principal limit factors. It's based on mortality. The younger you are, the less money we can give you. The older you are, the more money we can give you from the equity in the house, because we have to leave a percentage of the equity in the house. Our equity reserve has to be left in the house to make sure that since you're not making principal or interest payments, that there's enough equity in the house at your mortality that we get our money back one time. Hope that makes sense.
Yeah, that does. I think that'll help everybody. Now, so I have a borrower, right, or a prospect, and they're old enough, they have equity in the home, right? Now let's talk about another major concern they have, like how much income do they need to have, and or what does their credit have? What state does their credit have to be in?
That's a very good question. We get a lot of questions about this because people in the traditional world, which we all came from, forward mortgage world, they look, well, what's your DTI? What's your debt to income ratio? Or what's your loan to value? We don't have DTI pretty much. We have a residual income. It's like the VA loan has a residual income for housing expenses and things of that nature. We look at taking your core salary or core income that you have, and then we also look at determining what your obligations are, your mandatory obligations, your homeowner's insurance, your property taxes, any car payments or any installment payments. Once we take all that and we take it away from your income for the month, if it's an individual and you have $529 left over, you qualify. Doesn't make any difference to the other utilities, expenses, and things of that nature. Now, as far as credit goes, going to blow your mind. We don't use credit scores. So somebody, what's a 520? Is it 620 or 670 or 720? We don't do credit scores. We look at credit history. The only way you could ever be foreclosed on a reverse mortgage is if you don't pay your bills on time. What we're looking at primarily is your property taxes and your homeowner's insurance and any other associated fees you would have to pay just like if the house was free and clear. So we look at make sure you have the ability to pay your taxes and the willingness to pay them on time, and you have residual income to meet the requirements that you can pay those taxes and insurance.
Interesting. So let me piggyback off of the first one that you talked about with the age. You had mentioned something in regards to marital status. So what does that mean for a prospect or a borrower thinking about a reverse mortgage, whether their wife is or their spouse is younger or older, or how does that work?
Well, again, it's based on mortality, guys. It's you got to understand this is we're not qualifying the borrower. We're qualifying the amount of equity that's in the house. So if a spouse is 70 years of age and his wife is 60 years of age, we have to use the wife's mortality, basically 28 years, basically about 88. So we got to make sure that there's enough equity in that house. If they don't pay principal or interest payments, which is, it's not, it's designed not to pay, but you can make interest only payments, you can make full payments, you can make no payments. So what we're trying to do is based on your life expectancy of the youngest one and how much money you borrow and for how many years, we got to make sure we have that much in equity reserves so that when the last one moves out, God forbid the last one moves out and passes away at age 88, that there's enough equity in the house for us to get our money back one time.
Interesting. Okay.
We're basically we're deferring the interest. The interest is accumulating, but it's deferred against the remaining equity in the house that we've accumulated. It's a teeter-totter, guys. If you give somebody $500,000, if you give somebody $50,000 at 8% interest, we're going to calculate how much that's going to be by the time they reach mortality. Basically, when we calculate how much that's going to be is what we leave in reserves in the house.
Interesting. I'm pretty sure this is going to be really helpful for the loan originators that are thinking of how do I present this to my prospect. So hope this helps you guys. Guys,
we have forms that you can fill out. You can get from us. Go to, is it seniorlending.com? I mean, seniorlending.com.
Right.
If we have a division here, reach out to us. We'll be more than glad to help walk you through this. No questions is a silly question. Whatever you have a question, we all learn this one step at a time. So we're here to help you and support you. Thank you for your time, guys. Have a great day.